Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. On today's show, Bitcoin decouples from the stock market. Stocks lose $3.5 trillion, but Bitty's in the green. They're losing this money amid the Trump tariff war and Fed warnings of higher inflation. Also, global trade tensions are boosting Bitcoin's strategic allure, says VanEck. We're going to go through a market watch, Bitcoin technical analysis, a lot of stories to cover, all this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is April 4th, 2025, and day 2 of the Trump tariff, global tariffs. Oddly enough, the stock market's just taking a shit way down 6%. I think I saw S&P a few moments ago at close. But the Bitty is holding its own. Let's get right into the technical analysis and see what I'm talking about. Bitcoin up 1.25%, 83,802. Ethereum up 1.36% to $1,815. Solana up 5%, $121. Cardano up 1.5%, 65 cents. Doge up 4.5%, just under 17 cents, 0.169849. Let's take a look at the crypto bubbles for today. We have almost everything in the green. I'd call it a 80-20 mix. Doge up 4.5%. Pepe making a reemergence, up 8%. Algorand up 4.5%. OKB, which stands for OKB, up 8.5%. Ray up 5%. Sonic up 6%. Sui up 3.5%. Floki 3%. Zooming out to the weekly. Weekly is showing a little bit different. About 95% of the red. A few outliers. EOS has had a good week, up 40% for the week. Walrus up 20% for the week. Pendle, I haven't heard of this one. Currently ranked 100 in volume, up 20%. Hex up 25%. Zooming out to the monthly, we have, again, about 90% in the red for the month. Currently, the Bitcoin market cap is a $1.662 trillion. Ethereum is $219 billion. XRP, $123 billion. Solana, $62 billion. Doge, $25 billion. Cardano, $23 billion. Tron, $22.5 billion market cap. The total market cap for the entire crypto market right now is $2.65 trillion, with Bitcoin holding 62.84% of that. Ethereum 8.27%, XRP 4.6%. Crypto Fear and Greed Index shows us we're currently in 30 in fear. Yesterday was a 28 in fear, and last week was a 26 in fear. There's approximately 1,104 days left until the next Bitcoin halving in 2028, with 159,016 blocks left to mine. Top assets by market cap. We've got gold as usual at the top, 20 trillion, 20.5 trillion right now. Apple, 2.8 trillion. Microsoft, 2.6 trillion. Nvidia, 2.3 trillion. Excuse me. Amazon, 1.8 trillion. Google 1.78 trillion, Saudi Aramco 1.696 trillion, and there's the biddy who's flipped silver, 1.662 trillion, and silver is exactly the same market cap, 1.662 trillion, but it's taken a bit of a dip today. And Meta at number 10 at $1.27 trillion. You can currently get 1,193 Satoshis for one fiat US dollar, and the fiat US dollar current national US debt 36,684 billion. And the new data point we've been adding here is the Doge clock. First of all, that $36.5 trillion debt shows us that each U.S. citizen owes $109,259, and that each taxpayer owes $323,048. The Doge clock, they have saved U.S. taxpayers $281 billion. Excuse me, not bad for a couple months' work. And that equals to exactly per taxpayer saving of $2,502. Not too shabby. Of course, today we saw the stock markets tank, but what didn't tank is the biddy. So for quite some time, Bitcoin has been following the trend of the stock market, particularly, the S&P. And it was never like that in the past, but suddenly, I would say the past 6 months or so at least, it's been riding the coattails of the S&P, and as the S&P goes up, Bitcoin goes up, and if it goes down, Bitcoin goes down. But today, we saw what we would deem a Bitcoin decoupling. Decoupled stocks, and the stocks lose 3.5 trillion, but the biddy rises amid a Trump tariff war and Fed warning of higher inflation. Bitcoin adds gains as stock market drops a record 3.5 trillion in value, and the Federal Reserve Chair Jerome Powell warns of higher inflation and slower growth. As stock markets crumbled for a second day on October 4th, Federal Chair Jerome Powell said that the Trump administration's reciprocal tariffs could significantly affect the economy, potentially leading to higher inflation and slower growth. Addressing the public at a conference on April 4th, Powell maintains a cautious approach and noted that tariffs could spike inflation in coming quarters. This could complicate the Fed's 2% inflation target, just months after rate cuts indicated a soft landing, Powell said. While tariffs are highly likely to generate at least a temporary rise in inflation, it also is possible that the effects could be more persistent. Moments before Powell's speech, U.S. President Donald Trump called out the Fed chair to cut interest rates again. We talked about this, right? This is what they're looking for. In a post on Truth Social, taking a jab at Powell for being always late. This is Trump's tweet. This would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He's always late, but he could now change his image, and quickly. Energy prices are down, interest rates are down, inflation is down, eggs are down 69%, and jobs are up, all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. Yeah, that's exactly what Powell's doing. Currently, the Fed faces a critical choice. Pause interest rate cuts throughout the year or respond quickly with rate reductions if the economy shows signs of weakening. While the Fed official noted that the economy is in a good place, Powell said that it was too soon to say what will happen what will be the appropriate path for monetary policy? That's what he said. On April 4th, the unemployment rate also increased to 4.2% in March from 4.1% in February, but on that contrary, March's non-farm payroll added 228,000 jobs, which exceeded expectations and reinforced economic strength. In March, the consumer price index also rose by 2.8% year over year, with March data due on April 10th. Yeah, so let's hope that the biddy stops following the path of the S&P because we're bound to see some good gains. Right now and for a long time, it's just been follow, and we haven't really seen that many gains in the biddy. At this point in the halving, we would expect that the Bitcoin price would be, probably into the 150s, but we haven't quite seen that yet. Hopefully, this is a sign for good things to come. Now, global trade tensions are boosting Bitcoin's strategic allure, says VanEck. U.S. President Donald Trump's new reciprocal tariffs on 180 countries have reignited global trade tensions, which has led to a fresh interest in Bitcoin as a strategic financial asset, according to VanEck's head of DigitalAssets, Matthew Siegel. Following the April 2nd announcement, Bitcoin dipped to the 81,000 range amid broader risk-off sentiment. However, the flagship crypto stabilized and outperformed equities in the days that followed. Siegel attributed the resilience to Bitcoin's growing appeal as a neutral asset in times of economic uncertainty. He wrote on an April 4th client note, while slower growth alone isn't bullish for Bitcoin, the potential policy response is if tariffs drag on GDP without sparking a new inflation wave, the Fed may have scope to cut rates. He added that this would reintroduce the liquidity conditions under which Bitcoin has historically excelled. He also pointed out the growing appeal of neutral financial infrastructure as traditional assets become increasingly politicized or weapons. Nations adopting Bitcoin. Siegel pointed to recent developments that demonstrate how Bitcoin's role in the global trade continues to evolve, with several nations turning to digital assets for cross-border settlement. Intelligence reports revealed that China and Russia have begun settling select energy transactions in Bitcoin and other digital assets, marking a significant departure from traditional dollar-based systems. Bolivia, facing constraints on foreign reserves and payment networks, announced in March a plan to import energy using digital assets as payment rails. In Europe, French state-backed utility EDF is exploring Bitcoin mining as a use case for excess electricity and currently exports to Germany at a loss. Right, Bitcoin mining as a use case for excess electricity it currently exports to Germany at a loss. EDF reportedly views domestic mining as a way to monetize surplus supply in a volatile energy pricing environment. According to Siegel, these aren't theoretical use cases anymore. We're seeing monetary realignment in real time. He argued that the tariffs may act as a catalyst for this transition by forcing nations to reassess their resilience on U.S.-dominated financial systems. He wrote, in that context, the latest tariffs aren't just an economic story. They may be an accelerant for Bitcoin role in the emerging multipolar order. So we're seeing the biddy only one day out from the big tariffs. Took a hit for one day. The day before that, it was actually up to $88,000. The day of the tariffs, Everything dipped, including the biddy, and now a day and a half later, excuse me, the biddy, she is a pumping. So let's hope we keep this streak alive. It's again pretty interesting, and I think it's going the right direction now. The greater the problems are in the world, the higher the Bitcoin's going to go. Speaking of the world, we have tons of money out there, folks. Go get some. The current global assets is approximately at $900 trillion. So there's money abundance out there. It's time that's scarce. So spend your time wisely. Spend less money than what you earn. If you suddenly start making more money, start saving more money. Don't start spending more money. And start investing and saving when you're young, ideally in your late teens or early 20s, and hopefully then you can retire when you're 40 or 45. If you've got a great idea, start today with your idea. Even if you're not ready, start today and things will come together for you. I am on a path to have approximately 1,000 subscribers by the end of the year, and it would be great if you join me for this ride. Subscribing is free, so if you enjoyed what you heard on the stream, please share, like, comment, and subscribe, and we will see you on the next, folks. Thanks so much for joining.